Bienvenidos en un nuevo episodio del MadBitcoin Podcast. Soy Aldona Zukowska-Carames, fundadora de MadBitcoin, y tengo un placer enorme anunciar que con este episodio arrancamos con una nueva serie de podcasts centrado 100% en Bitcoin para negocio. Se llamará MadBitcoin Business y el co-host permanente de esta nueva serie será Alberto Mera, que conocéis muy bien como host de un podcast sobre Bitcoin. Y como todos sabéis, es una referencia en cuanto al conocimiento de Bitcoin y todo relacionado con Bitcoin para tesoreras y para negocio en general. Muchísimas gracias, Alberto, por acompañarme en esta aventura.
Nada, gracias a ti por invitarme. La verdad es que has sido capaz de traer a un elenco de invitados impresionante. Que nada, con muchas ganas de hacer esta serie contigo y hablar con todas estas personas que han creado el ecosistema de Bitcoin alrededor de las tesoreras, alrededor de los negocios y de las finanzas en general. La verdad es que no podemos empezar, yo creo, por un sitio mejor que con el tema que empezamos hoy, que va a ser hablando de Bitcoin en las pensiones, Bitcoin al final como ahorro para una jubilación, que yo creo que es uno de los temas, digamos, que más se asocian a Bitcoin desde su lanzamiento, ¿no? Tener un activo ahí con el que rejubilarte. Es verdad que meterlo dentro de las pensiones, como veremos, entra de diferente manera, se junta con otros activos, pero el hecho de que ya empiece a estar Bitcoin dentro de las pensiones es un tema interesante y creo que no podemos tener mejor invitado para tratar esto. ¿Quién viene entonces, Aldona?
Viene Sam Roberts de Cartwright, que es un auténtico pionero que tiene como más de una década de experiencia en consultoría de inversiones y es uno de los mayores defensores de incluir Bitcoin precisamente en los fondos de pensiones. Tan como has mencionado, él fue el primero que convenció uno de los fondos de pensiones más grandes en UK para introducir 3% de inversión de su portfolio en Bitcoin y parece ser que ha sido todo un éxito.
Sí, y de eso nos va a hablar, solamente para que la gente lo sepa. Bueno, pues la conversación será en inglés porque este señor es británico. Pero bueno, creo que YouTube te deja poner ahí subtítulos en español, así que nada, si queréis seguir la charla, pues podéis hacerlo de esta forma también. Nada, por mi parte ya, pues que venga Sam, ¿no? Cuando quiera.
There's a threat and an opportunity for those 607 schemes, plus all the ones in the UK and others around the world. This is both an opportunity and a threat.
Yeah.
So it's an opportunity in that we've talked briefly about these asymmetrical returns or potential returns. We've talked about the adoption phase giving potential outside returns. So that gives an opportunity. The threat here, though, is that once Bitcoin does mature, why would you want to have a pension when you can save in the money that's gradually increasing every year? And there might be some tax benefits still, and so it's not there won't necessarily be any use for pension schemes, but it'd be interesting to see how it works out. I think there'll be at some point pension schemes will be having to decide whether they embrace Bitcoin in some form or they wind themselves up.
Today on the MadBitcoin podcast, I'm so thrilled to welcome Sam Roberts, Director of Investment Consulting and Cartwright. Welcome to the show, Sam. It's a pleasure to have you here.
Thank you very much. Great to be here.
Thank you for coming. I also want to welcome Alberto Mera. For our Spanish audience, he's a very known Bitcoiner. He's got his own podcast called sobre Bitcoin. This is the Spanish podcast show that is focused on Bitcoin and its applications for corporations and for institutions. Alberto and I will be joining forces, starting with this episode, to bring first-class knowledge and insights about Bitcoin treasury strategies, Bitcoin for institutions, and for the corporate world. Welcome to the show, Alberto. It's such a huge pleasure to have you on board.
Yeah, no, thank you. Thank you for having me here. I'm also very excited because, you've brought people of great caliber like Sam Roberts. I couldn't, let this opportunity pass. And I also wanted my audience to listen to me speaking in English because, they're too used to listen to me in Spanish. So maybe they can listen to me in English for a change.
Great. Thank you so much. I'm so excited for this conversation. For all the listeners that are not familiar with your work, with your career, can you start, please, with a short introduction, how you ended up in the Bitcoin rabbit hole, how you ended up in Cartwright, and of course, where this idea of allocating Bitcoin for the pension funds came from.
Yeah, absolutely. Really good to be able to talk this through and explain to the Spanish audience. I started my career over 25 years ago, and it was on the pension side, advising pension schemes, corporate pension schemes in the UK, and that was all very as per normal. But then in 2008, the global financial crisis sort of woke me up a bit, and I thought, well, this is strange, because this is not consistent with what I've been taught at university in my actuarial exams. It didn't work. It was contradicting it, and therefore that set off in me a journey to find out why. And that led me to, so bear in mind that was 2008, 2009. Hadn't heard of anything to do with Bitcoin at that point. But it led me to the Austrian School of Economics, and then subsequently led me to gold and sort of what is money, and why gold has been historically a good money. And so if we're looking back to sort of 2011, 2012, I would have called myself a gold bug back in those days. And then in 2013, I heard again of this thing called Bitcoin. And I thought, well, it sounds interesting. I don't understand it. But the way to find out about it is to just dabble a little bit and sort of try it out in practice. And I think that's one of the things, maybe it's a personality trait or just the way that I like to do things. To understand it, I need to think about it a bit, but I also need to do it in practice. And that's what then convinces me whether it works or not. So that was 2013. I dabbled a little bit. I thought it was interesting. I didn't really understand it in those days. And then we rolled forward. Then I left it and I focused on my career more. And then came back to it a few years later, particularly in 2021. The 2020, of course, was COVID and lockdowns, and the Bitcoin price fell dramatically and then more than recovered dramatically as well later that year. 2020 was a very busy year for pension schemes generally, so I was kept very busy with the day job, but then saw what had happened to the Bitcoin price, and what I was thinking was, it's not dead yet. So back in 2013, I was thinking, well, that's interesting, but I was thinking, well, something else, another version will come along. But that hasn't happened. And it keeps staying alive. And so 2021 was when I then deep dived again, had a chance to do that. And for whatever reason, then it clicked. And it clicked for a couple of key reasons. So one is I read the Bitcoin Standard, and I think there is a version of that in Spanish now. So quite an academic, comes out from quite an academic angle, but it was perfect for me personally, because it brought together the Austrian school and gold and things like that, and brought them together and then put Bitcoin in that context. So it was a natural step for me. And the other thing was exploring NFTs. So it's the same principle. I was thinking, what on earth are all these about? I don't understand it. I'll dabble a little bit to try and understand it better. And it was like the opposite of a few years previously with Bitcoin, where it was like, oh, this is nice, but I don't quite understand it. This was, I do understand it, and actually there's very little value there. And not only that, but it helped me to understand Bitcoin better. I guess you've got something to compare it to. So that was all the personal journey, really. So coming to the end of 2021 was when I felt that it clicked in my mind sufficiently that I was sufficiently understood Bitcoin.
Sorry, no, I was going to say that as you were talking about your history here, you reminded me of Saif Edian for once, because he also came from the Austrian economics, from gold, and then understood Bitcoin, and also to Saylor, who also got to Bitcoin in 2013, didn't like it or didn't think it was going to survive, and then came about it again in 2020. So yeah, it's interesting mirroring stories there.
Well, it's very generous. I'll be honoured to even be spoken about in the same sentence as both of those people. But I think maybe you're right, and I think it's a journey that a lot of people go on, and it has to be a journey because it is something. It's a topic which is not widely understood. That's part of the excitement around it, of course, is that then you feel you're learning something, and once you think yes, there is something there, it pulls you in more and more. So then it rolls around to February 22, and before that, I was thinking, okay, I'm happy from a personal point of view. I understand it and it's got value, but there was no connection there from a business perspective, or client perspective. But February 22 was when Russia invaded Ukraine, and the key bit there is that Russia had $300 billion worth of foreign G7 bonds that it owned or thought it owned, but they were frozen. And so that reintroduced explicitly counterparty risk into G7 government bonds. And so for me, that was an inflection point.
Also, well, I'm sorry, because the pension part and the bonds part coupled with Bitcoin to me is very interesting. Since you've been, and we're gonna be getting deep into this, but you've been like the advocate for Bitcoin in pension funds. And the pension funds are known for having a lot of bonds, usually exposure to bonds, to sovereign bonds and stuff like that, as you just mentioned. 2020, so getting to 2020, my understanding, okay, living in the pension world was getting very difficult because all the bonds were yielding nothing, pretty much. So I remember having friends struggling to find anything to put on their pension fund because there was no yield anywhere. So they had some yield from like maybe 7 years ago. They had these bonds that were very very valuable, but they were like, okay, I'm not selling this thing because what am I going to buy with it? But then 2020. And what happened later when they started? So first we had the bonds going down, the price of the bonds going even lower, and then we have the rates going up again. So I imagine from the pension part, as you mentioned, that was a very interesting situation, and I want to know exactly what was your thinking about it, because there's Bitcoin, which has its characteristics, but in the pension and in the bond world, there were happening a lot of changes at the same time. So you had rates going up and you had the bonds falling. So what was actually your thinking there to start believing that this could be interesting, to have Bitcoin in the fund?
So it's probably worth distinguishing between two key types of or corporate pension fund. So one is what's known, and I apologize, I don't know what it's called in Spain if it's different, but defined benefit pension scheme is what it's called over here in the UK. Actually, I think you have very little in Spain. I think it's typically the UK, US, Ireland, Netherlands, I think are the particular key places relevant. So the idea there is that the company, the employer, promises the employee a certain percentage of their salary for every year they've worked, and that pension is then paid from a particular age, let's say 65. And so that's what their promise is. Now, the problem is if you promise a certain pound amount of pension every year from some date in the future, there's lots of uncertainties. In short, you've no idea. Well, you can have a rough guess, but you don't really know how much it's going to cost to pay that pension until someone dies, and then maybe their spouse gets some pension as well, and then they die ultimately. You don't know how much that's going to cost. And so the way that it works in the UK is that promise is put into a trust structure, a legal structure. It's a separate legal entity, along with some assets, along with some money from the employer to back that up. But we don't know in advance whether that's going to be too much or not enough money. And so every so often it's that there's a sense check as a sort of valuation of the scheme to see whether some more money needs putting in or not. From an investment point of view, they've got in that trust, they have a portfolio of assets and they're trying to get some kind of return. And the more return they can get, of course, the cheaper it will be for the employer to pay those ultimate pensions. So we're looking at that very much on a portfolio basis across lots of different pensioners. And therefore you can say, well, it's okay to have some bonds. It's okay to have some equities, some property, and of course now some Bitcoin. but you're thinking about it very much from a portfolio construction point of view. It's you say, if you add in a volatile asset, say 3% allocation, what you shouldn't really be doing is saying, oh, that 3% is very volatile. What you should be doing is looking at the portfolio as a whole and saying, how volatile are the returns on the portfolio? What do I expect the returns to be from that portfolio? And to work out whether that's the best portfolio construction or whether you should add something else in or take something out or whatever, change the allocations. So that's the principle there on the defined benefit side. The defined contribution, which is, of course, sorry, you've got a question.
No. Continue. Keep.
The other type is defined contribution or money purchase, and this is very popular, I think, across the world. And the employer puts some money in, and the employee puts some money in, and it's invested in some way. And then whatever it is, when that person gets to, let's say, 65, whatever that pot is of money, that's what the member gets. So that might be too much. It might be not enough for what they're expecting, but it's the pensioner that basically has to enjoy or suffer the consequences of it being too much or too little. So there, it's a different scenario. So right now after that explanation, I've forgotten what the original question was.
No, but so I can take it from there because is there a difference between deciding to put Bitcoin in one or the other? Like, is it the same? Is it the same rationale, or does it change?
So it's looking at. So I think it's a bit different. That's why I made that distinction. So the pension scheme that invested a year ago is one of these defined benefit pension schemes. So they've got one portfolio of assets. They need to provide pensions for lots of members, lots of pensioners. And so they're looking at things on a portfolio basis. In some ways, it's easier to justify that. You could add a little bit of this, a little bit of that to try and get a better portfolio. So that should be easier. But the problem is that the Bitcoin's new. And a lot of people haven't yet got their head around it. And I think also there can be an element of herd mentality in our industry, sadly, which means that there's reluctance to try out new ideas, particularly, I guess, when they are so new. And I think it's probably worth stating that it doesn't mean that Bitcoin is relevant for all 5,000 of these schemes that we've got in the UK. My rough rule of thumb is that it's probably relevant for 500 of them rather than 5,000. But that's still more than one.
So the way you are talking about it, I'm thinking, well, it makes more sense to have Bitcoin in the defined contribution one because you've promised this contribution in the future. So you really have to get that return. Whereas in the other one, if it works, it works. If it doesn't work, it doesn't work. And adding the Bitcoin risk may be too difficult to get them to accept it. Is that why is it easier to have it in the defined contribution than on the other one?
I think it should be. It's just different. So on the defined contribution side, that member gets whatever, that member of staff just gets whatever that pot of money is at the end. So on one hand, you could say the company's not that bothered, the trustees aren't that bothered. All they're trying to do is say, look, this is the money going in, these investments you've got, good luck. I don't think trustees tend to approach it with that attitude. They tend to be a little bit more paternal. However, you could argue that that's their baseline of responsibility. But I think it should be easier in some ways to introduce Bitcoin to these defined contribution schemes, because you could say we're going to introduce an option to get to invest your pension in Bitcoin, and it's up to you, the member, to decide whether you want to go into that, and you enjoy or suffer whatever happens to it in the future. And there'd be I think some people panic and think that very binary terms. So it's like you invest whatever the existing options are, or you put all your pension in Bitcoin. Maybe that's what some people want to do, but that doesn't mean the trustees want to do it. But there's middle ground. So you could have where, you could create a fund which combines Yeah, maybe it combines Bitcoin and gold and equities or something like that. You notice I didn't say bonds there. So you could combine it in some way and construct it so that the trustees don't feel that they are just completely signing it all over to the member. But we're still fairly early days in terms of those options being available.
Yeah, you have allocated with this first operation only 3% of Bitcoin. Where does number come from? Did you made any like special calculation that would be like the optimum, or was it because like very not risky a bet? Because this is something completely new, and just in case it doesn't work out, it's not that much.
So there's no optimal in the sense that to work out the optimal, you'd need to use lots of assumptions about what could happen in the future. Ultimately, we don't really know, but we don't know. So it's trying to come up with something that's reasonable. Now, what's really helpful here is when you look at the risk profile of Bitcoin, it's got limited downside in that it could go to zero, but it's got huge upside potential. So it's very asymmetric, and that's a we'd like as many of those as we possibly could find. There's not many around, so this is really helpful. So what that does is it means that you can justify a small allocation because you're still making a big difference. If you're holding it for 10 years, let's say, you're still making a big difference with all that compounding of increasing the price, if it goes in line with your best guess of what might happen in the future. But on the downside, you can only lose what you put in, the 3% in this example. So that's very helpful. And the other thing is we did do some sensitivity around what happens if you put 2 or 3 or 4% in, and how does that look in this specific portfolio? And for another trust, another pension scheme, they'll have a different portfolio with other things in it, 97% in other stuff, let's say. And so the answers might be a bit different. Maybe it's better for them to have a bit more, a bit less. But for this particular scheme, it was specific to them.
All right.
I was thinking that, when a strategy adds Bitcoin to their balance, and now that they can count them as, profits when the price goes up and all that, then everybody can see whether the strategy is working or not working, right? You're making more money, then it works to have Bitcoin on your balance, or you're making less money, and then it maybe doesn't make so much sense. But in the case of having Bitcoin in a pension fund, like you did in October last year, how does it work? Is there a way that you could, showcase the better performance of your pension fund so that other pension funds look at your pension fund and think, oh, maybe it makes sense to have this allocation to Bitcoin?
It's very difficult to compare one against one of these DB schemes against another one, because they're all in slightly different situations. So they might have, one might have appetite for taking lots of risks. Another one may be much more cautious. So you can't really compare to but obviously you can look at the Bitcoin price and say, well, actually, if you put this in, then the last year's so far we're not quite at 1 year. We're about a week or so away. So far it's looked very extremely positive. So we can do that analysis on any pension scheme. We can say, what does it look like if you don't have Bitcoin, your current portfolio? What happens if we add Bitcoin in? And there's lots of different investment risk metrics that can be looked at to compare the two. But most of the time, what it looks like is that it might you add this extra volatile asset in, it might add a little bit of portfolio volatility at the margin, but actually it's adding quite a lot of potential investment growth or investment return.
Yeah, I was thinking about it in terms of promotion, right? Because talking about pensions is not like, very cheerful. It's not the kind of thing that gets a lot of covers in magazines and stuff like that. But what Sailor is doing, of course, got a lot of newspaper covers and stuff like that. So that's why I was asking this question, because are you finding it difficult to promote the idea of having Bitcoin in pension funds, despite the fact that having Bitcoin in this fund has worked really well.
I will give you one idea. I've just made I've made some calculations like a few months ago. I reviewed all the pension funds that are working in Spain. There are 607 exactly. At least it was on last June. And out of 607, only 8 were having the return over the accumulated inflation in the last 5 years. 8, like 1.5%. So the rest of them are losing money. So I think no one is talking about it. Every time when I'm driving my my daughter to school and I'm turning on the radio and I'm listening to the announcement regarding the pension funds, and this is the great allocation for the investments, I'm always thinking about this number. And then I'm thinking about Cartwright, because when I heard the news like last year, this was the first, like one of the first articles that I wrote about Cartwright investing in pension funds. For me, it was so revolutionary. So I think that if we compare at least to the inflation, we don't even need to have to look too much of the other metrics. I'm convinced if we do it, let's do it one day. I'm convinced that it's gonna have much better performance, the one with Bitcoin, than the one without Bitcoin, because the one without Bitcoin, we already know that they're all losing money. We know it. You just compare it to the inflation, and you just see it. The inflation accumulated in Spain is 18% in the last 5 years, and those 8 are having the performance between 19 and 23. So they are like very, very very little over the inflation rate. So I think that will be the greatest, the greatest publicity for for the pension funds now. Yeah.
Yeah, I think you're right. So it has been difficult to explain over the past year or so. Well, more than that. I mean, we've been talking about it direct, even if it's not been public. We've been talking about it with professional trustee firms over here for 3 years or so. And so now where we are, and over the past few months, so it is difficult because it's new. It's a different way of thinking about the world. It can be it's so easy to go off at tangents because money is such a broad subject. And so I think one of the problems sometimes is that professional trustees, understandably, they want to understand as much as they can. But there's a risk there of overthinking it. And then 5 years later, maybe they'll finally get round to making a decision, whereas could a decision have been made sooner? Well, possibly. So if it's like you've got the thinking that would be, it needs a little bit more than this, but the principle would be you've got an asset here that's performed superbly well over the last 15 years. We can do some analysis to show, one, you've got a long investment time horizon. That's a key factor before, when I said there's 500 of these schemes, plus all the DC schemes, one thing they've got in common is that they've got a long investment time horizon. So 5+ years, the longer the better. And that then means that we're using that time to essentially say, if there is short-term volatility, then we can ride that volatility through. We can be more relaxed about it. We're not panic selling. And so if you have this super volatile asset and you put it into portfolio, what does it do? What are the expected results? How much can you rely on those assumptions? What's some sensitivity around those assumptions? Does it still give a result that you could be happy with? In which case, let's crack on. A lot of trustees don't get to the stage of doing some analysis on their portfolio. There's so much, looking at whether it's the press headlines over the years, or thinking, all those myths that we're aware of. The immediate response has been, in many cases, to dismiss it out of hand. And that is a real shame, because I think if it was any other assets, then, and I think there's been some study around this where you ask the question of, you've got an asset which does this, does it, nothing's guaranteed in this world, but has done this or is expected to do this, and these are some of the risks and these are some of the benefits. would you be interested in seeing how it fits in your portfolio? And it's, oh, yeah, maybe. By the way, it's Bitcoin. Oh, no, I don't want anything to do with that, right? So it's illogical as to why that is the response. And a real shame, because it's the members or the sponsoring employers that are losing out of it as well. The sponsoring employer, if they're having to make up the investment difference. And so I wouldn't be surprised if in a few years' time we have sponsoring employers going after having some difficult conversations with the professional trustees that they have hired to run their pension scheme for them, to say, have you thought of Bitcoin? If not, why not? When did you start thinking about it? And so, well, are you really doing your job if you're closing your mind to these sort of ideas so quickly? So it'll be interesting to see how that works out. But I think we're getting closer and closer to the point where thinking about Bitcoin is no longer a career risk to raise that. It's a career risk to not actively make a decision on whether you should or should not include it within a portfolio. If this is for any institutional investor. I mean, particularly we've had in the UK, the HMRC, so that's our tax revenue service. So they issued, there was a note or guidance note that they issued only last week, I think it was. It's hard to keep track of day. One day blurs into another a little bit sometimes. Maybe it was earlier this week. I posted something on LinkedIn about it, and it was talking about how following I think it was the 8th of October, because from the 8th of October in the UK, retail investors are allowed access to what are called ETNs over here.
ETNs, no? Yeah.
Or, ETFs or sometimes. There's some technicalities there, which I'll let other people explain. But essentially, it's getting access to Bitcoin through these tax wrapper savings accounts, whether it's pensions or shorter term savings. And there's been a ban on them for the last 4 years. And the ban has been lifted from the 8th of October. But at the same day, HMRC came through and they were talking about how these are, there's still some restrictions around it. But they did refer to how registered pension schemes, which is basically the institutional pension schemes that we deal with, they can invest in these ETNs, these crypto ETNs as they're called. And we're not interested in the non-Bitcoin ones. But the point here is that HMRC has said that registered pension schemes can invest in an investment vehicle which can hold Bitcoin. So coming back to sponsoring employers out there, if there are any sponsoring employers out there that are interested in this, they should be asking their trustee, have you got an active, informed decision about why you don't have an allocation to Bitcoin? HMRC is basically saying it's fine. The FCA is saying it's fine from a retail point of view. I don't think there's that much defense anymore. You mentioned inflation and 8. Is it 8 in
18. It's official. 18 accumulated in the last 5 years.
18 out of 607, I think it might have said. So that's not very many. They're the only ones that have beaten inflation over the past few years. I mean, I think it's a strong argument, isn't it? But the trouble is that there's a lot of misunderstanding about what inflation is. A general misunderstanding that inflation is a rise in prices rather than an inflation of the money supply, which of course was its original definition, which leads to a rise in prices.
Yeah.
And so if you're thinking about inflation in terms of price rises, looking at then an asset which has a hard cap supply, it doesn't join up. It doesn't make any sense. You can't see why they're in the same conversation. But if you think about it properly, and inflation being that inflation of the money supply, then suddenly it does make a lot more sense why then having an asset which doesn't increase in supply could then offset or mitigate that risk that you've got of price rises, albeit indirectly. So yeah, that's a whole topic in itself.
Yeah. But I think that, we still like the basic education. We always repeat it. There is a lack of basic education among people about every aspect about money, about every aspect of the inflation. Nobody understands it, so they think that if they allocate part of their money in the pension fund and they get 2% per year, they are happy with that, and they don't understand that the official inflation is 2%, but then you look at the very detailed statistics, and in Spain the inflation of the food and of the clothes is like, there are years like during this last 5 years it was up to 50%, 50. It was up to 35% for some things. It was up to 150 for some kinds of the elements. So you cannot like even believe that 18% is the right one. So we are even worse than this. If we look at the real inflation, if you really dig down deep, what it is, there will be non-pension fund that is like really recovering and is trying to catch up. I've got like the other one, a very technical question, because I think it's very important. I was yesterday at some interview and they asked me what will be the challenges for the institutions that are betting for Bitcoin. And one thing that came up to my mind, I think it's a very important one, is the custody. Is the custody for the institutions. There is a lot of talk about the custody for the private clients, for the guy like me, like Alberto, like you, buying their Bitcoin. We can choose from many different products. Well, the best one is cold storage, of course, for the Bitcoin maxis like me. But cold wallet is not the solution for the pension funds, not neither for the Bitcoin treasury companies that are managing millions in their custody, billions in their custody. You cannot just take it to the cold wallet and take it to your pocket and just lose it somewhere and forget your keys. What kind of solutions are you proposing to your clients, or are you thinking of proposing to your clients in terms of this custody of the Bitcoin? Because I think this is very the risk of losing the access to the Bitcoin once you buy it. It's like the fear and the topic that is the most time raised every time when I speak to anyone about Bitcoin. Okay, but where the Bitcoin is, and what if I lose it, or what if someone hacks it? So, what are your solutions that you are proposing to your clients?
So I'd agree, first of all, that custody is absolutely critical and actually is the main the main issue to address. Bear in mind that the client that invested 3%, but also other clients, what they are doing is just buying on-chain Bitcoin and holding it. They're not playing any silly games with it. They're not lending it out for a yield. They're not investing in non-Bitcoin. So that's their focus. In one sense, it's simple in that they just need to buy it and they hold it. And yeah, there may be times when they trim some of the profits, because if it got to 99% of the portfolio, they definitely would not be sleeping at night. So what we've done is we've applied the same principles that you'll be familiar with from a Bitcoiner point of view to institutions. And I think that's where it's dovetailed really nicely, because we've been able to think through what is possible from an institutional point of view, and how do we mimic as close as we can those Bitcoiner principles. So cold storage, self-custody would be an example of that. Holding on-chain Bitcoin would be an example of that. Now, things will evolve, I'm sure, but at the moment it's difficult to see pension trustees holding their own keys. And I certainly can't imagine them, sitting around with 12 words on a piece of paper each, or one of these hardware wallets. It's just not very practical. So you could set up some kind of multi-sig approach, but it's still not very practical. However, there are institutions, specialist custodians, that allow some flexibility around how and who holds the keys, so you can spread them out, and you can still introduce quorum, so it's like a multi-sig approach. Excuse me. But it all comes back to that. You want to think very carefully about making sure that you can see the wallet address, so you've got full. So if a trustee wakes up in the middle of the night and I don't know, they see a headline on their phone or something, Trump says something about tariffs or whatnot, and they're worried for a reason, they can basically, they know their Bitcoin address, they can search it on mempool.space and they can see their Bitcoin still sitting there. And you don't have that kind of visibility with any other asset. It's sort of, Bitcoin is weird in that way, in that it gives a huge amount more transparency, and everyone is extra worried about it and wants to, anything you do, wants it to be 10x more secure than anything else, any other asset that you hold. And some of that is caution, is fair enough, but equally we've got to be reasonable in terms of where we set the bar.
As we get to the end here, I wanted to ask something because I don't have anybody else to ask this to, and it's something that you probably thought about, because you mentioned before that pension funds and the institutions such as these ones, when they buy Bitcoin, they do it with the idea of holding it for years. And as more institutions get into Bitcoin, the volatility will dampen, because if they're not selling, and we've seen this in the volatility over the past year and a half or so, the volatility in Bitcoin has gone down quite a lot. I believe it was like 1.3 times the volatility of the S&P just a month or so ago. And a year ago, it was 6 times the volatility of the S&P. So it's gone down a lot. And I wonder, if the volatility goes down a lot, is still Bitcoin something that could be interesting for this kind of institution? Does it work? Does it work against Bitcoin as an asset, or does it work in favor of Bitcoin as an asset? Because if it gets to a point where it's less volatile than gold, which could probably be in the next few months if gold goes this way, then maybe it makes more sense to have gold. I don't know. This is something I've been thinking about.
I think there's 2 key reasons why we'd expect the price of Bitcoin to go up over, over a reasonably long period. So short term, who knows what it could do, but longer term. So one is the fact that it's got a fixed supply, and everything else in the world has maybe except time, has an increasing supply. So obviously we can compare it to gold, we can compare it to fiat currencies, but we can also compare it to just goods and services, and milk, beef, pasta, whatever that might be. So that in itself, particularly when it's a larger, more mature liquid market, should mean that it continues to increase in value every year. And relative to those goods and services, shouldn't be anywhere near as volatile, because it'd be much more liquid, a lot more buying. People will use it as a savings account. And it will then draw money away from things that we currently use as savings accounts now, whether it's fiat savings accounts or whether it's people's houses, which effectively are used partly as somewhere to live and partly as a savings account, and those kind of things. So that's reason number one why I would expect long term for it to continue to increase. The medium term reason for it to increase faster than that is the adoption curve. And that for many is where, at the moment, is where the opportunity is to get these potential outsized returns because of that adoption coming through. And that could, who knows how long that will actually take, it could happen very quickly if there's some kind of event, or it could be decades. I'd like to still be around when it happened, because I think that world in which we have a money that can be relied upon, and most people just want to have a money they can save in. It's not going to lose value. In fact, it should gradually increase in value, and then they can focus on their family, their job, their whatever, which might be nothing to do with Bitcoin apart from they save in Bitcoin. That I think is a much more attractive world than the one we currently live in. So I'd love to be able to still be alive to experience that.
That's why we Bitcoin.
You have to come. When you come to our event, you need to make some very specific workshop also, not only the panel, but the workshop on this topic, because I find it so interesting, and I find it so necessary. As I told you, the numbers don't lie. The rest are opinions, but the numbers don't lie, and the pension funds are just losing money. Just comparing it just with one indicator, for me, they're losing money.
Outright fail. And then this, gets them to think of something else like Bitcoin, to to have in their portfolios. But yeah,
But we
maybe
need
it's
to
a bit too
start with
harsh.
education. We need to start with education because, we first need to put people on board with Bitcoin, and then we need to show them, look what you can do.
There's a threat and an opportunity for those 607 schemes, plus all the ones in the UK and others around the world. This is both an opportunity and a threat.
Yeah.
So it's an opportunity in that we've talked briefly about these asymmetrical returns or potential returns. And we've talked about the adoption phase giving potential outside returns. So that gives an opportunity. The threat here, though, is that once Bitcoin does mature, why would you want to have a pension when you can save in the money that's gradually increasing every year? Now, there might be some tax benefits still, and so it's not there won't necessarily be any use for pension schemes, but it'd be interesting to see how it works out. I think there'll be at some point pension schemes will be having to decide whether they embrace Bitcoin in some form or they wind themselves up.
Yeah, I guess many Bitcoiners that are just using Bitcoin as their pension will be, the thing to compare them with. Yeah. I don't know. It's been great.
Always saying, Mike is always saying, why would you sell the winner to buy the loser? For him, it's so crystal clear. Just buy Bitcoin and just don't do anything else.
The message, I think, is we are getting closer and closer to the point where people really need to get off zero Bitcoin. We have the geopolitics and the financial condition of governments generally, but also economies. I don't think people appreciate how fragile the fiat monetary system really is, and therefore, even if you only set yourself up so you can invest in Bitcoin, but you then got the infrastructure to flip over quickly as and when you need to. How does that not make sense in a world where we've got so much fragility?
Yeah.
Said. Well, Sam,
we need to record the second part, like new conversation. For sure, we're gonna do it. Go on, Alberto. Sorry.
No. I just wanted to thank Sam because we didn't have time to get over a few of the current situations because of course Britain is in its own situation, let's say financially. Spain is as well. Aldona shared some statistics there, and it will be interesting how this evolves over the next few years. As you said, geopolitically it's looking increasingly risky. But yeah, thank you very much for being here, and I hope the work you're doing with pensions continues to grow and more people are interested in it, because I believe it's super interesting.
Yeah, one of the things that worries me is that we've talked about pensions already, but with the government's finances looking so shaky, it's going to be private companies and charities that are going to need to step up and fill the void to help out, to basically, at its more extreme, to keep society together and to fill in some of the gaps where the government is forced to pull back. Because
to do what they were doing before, right? Basically.
Yeah.
Just as we always do. They always do. Yeah.
So what we'd love to see is for charities and companies to be more robust financially, and then they're able to step forward and act and fulfill their mission. Whereas at the moment, I'm just concerned that they're going to be, if inflation is, goes back to what it was a few years ago, then suddenly they've lost 20% or more value of what the assets they thought they had. Well, that means they're 20% less likely to help their staff, help their customers, support their mission.
I don't want to get carried away, but you mentioned this, and it reminded me that, well, the British were the ones who innovated pension funds initially, with this, I don't know how to call them, but basically organizations, people working for the same company that were getting together, putting some money away just in case one of them, got sick or, wanted to retire or whatever. And this was a completely private thing. So it would be interesting if the next iteration innovation in insurance also comes or pension also comes from the British Islands. So yeah, that'd be nice.
Yeah, I mean, there's quite a lot that could more that could be talked about that, because you think about what's the key risk that a lot of people have when they retire. Well, it's outliving their savings, outliving their pension pot. But there's ways of dealing with that, and there's things like tontines, which are probably making their way back, which I think is French, French word originally, but yeah, so things like that, so essentially it's just pooling life expectancy risk in a pragmatic way. And so it's I guess out of we've got a society that's really struggling over here, an economy that's really struggling, despite what the headlines say. But out of difficult times can come some fantastic ideas that can then last the next century. And I think if we think about books such as The Fourth Turning, that's exactly how it's a model for how things might turn out. So we're looking at solutions here that can then replace the institutions that have existed for the past 80 years and look to last for at least the next 80.
Yeah. Hope so.
Thank you.
Hope so. Thank you so much, Sam. It was such a pleasure to have you here. See you next year in Madrid. If you're here earlier, just give me a call. Gonna have some tapas anytime.
Look forward to it.
Right. Thank you so much and speak to you soon. Bye bye.
Thank you.